Hey guys, welcome back to Trendy Gadget. Today, we'll talk about what is a short squeeze and what has Wallstreetbets to do with it. Let's head into it. What is a short squeeze? When a stock or other asset jumps sharply higher, a short squeeze happens, forcing traders who had bet that their price would fall to purchase it in order to forestall even greater losses. Their scramble to buy adds only the upward pressure on the price of the stock. Short sellers borrow shares of an asset they think will fall in price in order to purchase them after they fall. If they're correct, the shares are returned, and the difference between the price when they initiated the short and the actual sale price is pocketed. They are forced to buy at a higher price and pay the difference between the price they set and their sale price if they're wrong.
The shorts, they believe the price is going to go down.
Short sales have an expiration date, so short sellers may have to act quickly to limit their losses when a stock increases in price unexpectedly. Short sellers' flight and their impact on the price of the stock is known as a short squeeze. Short sellers, actually at a loss, are squeezed out of their positions on a stock they think is overvalued by the market. Short sellers zero in. For instance, with its innovative approach to producing and marketing electric vehicles, Tesla captured the enthusiasm of many investors. Investors are strongly betting on its potential. Short sellers are strongly betting on its failures. Tesla was the most shortened stock of the US exchanges in early 2020, with more than 18% of its outstanding stock in short positions. Tesla stock climbed by 400% between late 2019 and early 2020. Short sellers got hammered, losing about $8 billion collectively. In early March 2020, during a market downturn, Tesla stock finally fell, along with most others. One in a sell-off that lasted a few days, short sellers made about $50 billion.
The headline where it shows how Tesla shorts have lost, well, a lot of money, as you see there.
Why short squeezes happen. As mentioned, short sellers open stock positions that they think will decline in price. Their reasoning, however sound, can be updated by a positive news story, a product announcement, or an earnings beat that excites buyers' interest. The turnaround in the fortunes of the stock may prove to be temporary, but if it isn't, as the expiration date on their positions approaches, the short seller can face runaway losses. They usually choose to sell out immediately, even if it implies a significant loss. Short interest and the short interest ratio are two measures helpful in identifying stocks at risk of a short squeeze. Short interest, as a percentage of total outstanding shares, is the total number of shares sold short. Tesla's short interest of 18% was extremely high. The short interest ratio is the total number of short selling shares split by the average daily trading volume of the stock. Speculative stocks tend to have higher short interest rates than companies that are more stable. Watching brief interest can tell you if there is a change in investor sentiment about a business. For instance, if a stock typically has a short interest of 15% to 30%. A move above or below that range could signal that investors have changed their perspective on the company. Fewer short shares could mean that the price has risen too quickly, or that because it has become too stable, the short sellers are leaving the stock. What the users of Wallstreetbets did. The Wallstreetbets Reddit message board is legally manipulating market stocks while being protected by the First Amendment, also known as freedom of speech. Gamestop, which will go down in history as one of the largest short-selling upsets ever, has been the latest target of this millennial and Gen Z-driven trading blog. In 9 trading days, GME is up over 600%. A company whose market value was only $1.2 billion 2 weeks ago has now lost more than $6 billion to short sellers.
Why? Well, shares nearly doubled today. They've soared 275% in a week.
For this GME rally, there were no other perceivable catalysts other than RC Ventures, a major GME shareholder, and its co-founder and managing director, Ryan Cohen's announcement on January 11 of 3 new board members. In an attempt to pull the business out of its obsolescent trajectory, these new directors will join the rank of this dying brick-and-mortar retailer. This little piece of bullish news was enough to start the domino effect of Reddit memes, screenshots of massive gains, and buying FOMOs. GME to the moon was driven by the millions of self-proclaimed degenerates on Wallstreetbets through tens of thousands, if not hundreds of thousands, of Robinhood trading accounts. The perfect storm of chaos caused a parabolic surge of GameStop. GME had an unprecedented level of short interest, which amounted to 139% at its peak of total shares held short, meaning that there were not even enough shares out there to cover these high-risk positions for everyone. As the WSB message board was hit by more unqualified due diligence, memes, and screenshots of incredible gains. markets, more and more degenerates piled up in GME, just hoping to catch some of the profit action. This caused other bigger cascade of larger institutions, short sellers, to cover the short positions, which made GME's upside more radically bigger, catalyzing the big short squeeze. Now the question is whether Wallstreetbets will target another very short equity, or whether GME is a one-off with its enormous degree of retail trade influence. Will Wallstreetbets mark the end of short selling as we know it? Or was GME a one-time sideshow in the market? What do you think about short squeezes? Do you believe that short selling as we know won't be a thing anymore in the future? Let us know in the comment section. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss any of our videos in the future. Also, watch the 2 videos that are on your screen because I'm sure you'll love them. With that, I'll see you in the next video.